morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, the equity market uptrend continues. Basically, I'd like to do a little bit of a recap. So last week, equities were a little bit soft. It was a holiday week. I hope everybody had a happy Easter. But basically, after being up 5 weeks in a row, the S&P, the market gave back a little bit. Same with on the NASDAQ. Transports were hit a little bit harder, but that, of course, has been leading 9 weeks up in a row. Small caps also gave back a little bit. So this is a normal digestion of the current uptrend. However, there are a few things that we still need to happen for this to turn into a rip-roaring rally. But we are seeing some improvements looking at the specific S&P 500 sectors, meaning the utilities and staples led, which are defensive, and they're still leading. However, on a relative basis, we did see those coming back down a little, and we do see technology and industrials taking over. Now, the NASDAQ 100 is lagging, and basically it's lagging due to the fact that the biotechs, the large cap biotechs that I've mentioned before many times, are still just coming off their bottoms. They're not near their highs at all. They haven't come back into this market. And that's really what we need to get perhaps this market moving. So I expect that we're going to see a little bit more sideways movement in this market, digesting the gains we made over the last few weeks. But for clues as to if we will continue to move forward, I keep my eye on some of those biotechs. And specifically, I'm talking stocks like Gilead Sciences, symbol GILD, trying to make its way off the bottom. Celgene, symbol CELG. Amgen's doing a little bit better. Biogen, symbol BIIB. And Regeneron. Those are kind of key big cap biotech stocks that may need to push that NASDAQ 100. The technology stocks in NASDAQ 100 are doing pretty good. Stocks like Microsoft, Facebook's near its high. I'd keep an eye on that. If it can take out that 117.59 high, that may be a clue that the market's going to continue going. Amazon's above its 200-day, 50-day moving average. Looks like it's keeping supports holding up there. It's doing pretty good. Same with Google. So those stocks pretty much decide the direction of the market. I don't think this is just a bear market rally because the breadth is too good. It is spread out amongst all sectors. But again, we have that disconnect where healthcare is lagging, specifically the biotechs, even though going forward, the revenues are some of the strongest that we're seeing in the S&P 500 for 2016 and 2017. So that may be a whole clue in this market. So we don't have any specific trade for you today. As I always say, let price and volume be your guide, but keep your eye on those stocks that I've mentioned. Those may be indeed be the clue as to what the market may do going forward. So as always, have a great trading week. This is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.